Happy Friday, everyone. Welcome to this really exciting event. I'm together here with Mike from TrendSpider. Today is our official launch with the TrendSpider team. We've been working on this integration for a few months and we are very excited. And today we're going to show you how you can benefit from the power of MenthorQ data into the TrendSpider platform. And here we are with Mike. So Mike, welcome. Nice to have you. And if you want to introduce yourself and we can start from there.
How's it going, guys? Thank you so much for having me, Fabio. My name is Mike. I'm in marketing here at TrendSpider. I kind of handle a lot of the video content and webinars and help demonstrate the power of the TrendSpider platform, just like in stuff like this. So yeah, obviously Fabio just introduced, it is the official launch of the MenthorQ indicators that you can use on the TrendSpider platform. You can see them, the gamma levels on my screen right here. These are live updating throughout the day. And so real quick, I just want to show you guys exactly how you can actually get these indicators onto your TrendSpider charts. So they are all live now on the TrendSpider trading tools store page. So we're going to drop the links in chat so you guys can access this. But basically, this is the MenthorQ store page. If you guys are a TrendSpider user, but not a MenthorQ user yet, you can subscribe to them right there. And if you keep scrolling down, you can see all the 3 different indicators. We have the gamma levels indicators, blind spots, and the MenthorQ conversions that we're going to show you guys today, show you how they work and all of that good stuff. And we also have some awesome scanners for you guys. And so once you click on one of the indicators that you want to add, and you go ahead and subscribe to MenthorQ, Fabio will kind of show you guys the process. They give you access to them basically. And then once you do, you pull up your TrendSpider platform right here, and you can open up the indicators tab right at the top of the screen right here. Just type MenthorQ, and then you would be able to just click these and add them to your platform. And you can see them right here. Once you subscribe, MenthorQ will give you an API key, which you will go ahead and paste in either right here, right in the indicators dialog box, or once they're on your chart, you can go ahead and click the 3 little dots right there, insert your API key, and then they will they'll be live. And for the gamma level specifically right here, there's 2 different types, the end of day and intraday, which I'm sure a lot of the MenthorQ guys already know exactly how it works, but that is how you switch between the 2 on your indicator here on TrendSpider. And then you can obviously see all of your different levels, make them visible, hide them, yeah, and all that good stuff. And then you just click apply and you'll see them right here on your chart. You can see I have SPY open. And so, yeah, Fabio, that's pretty much how you access the indicators, get them on the TrendSpider chart. Maybe now you can go into explaining a little bit more about, what these levels are, maybe starting with the gamma levels indicator.
Yeah, absolutely. And so first, before we do that, once you subscribe to MenthorQ, to get access to the indicator is very, very simple. So you would just log into the dashboard, look at the left-hand side, click on integrations, and just simply click on the TrendSpider section. You just need to give us your TrendSpider email. So by leaving the email there, just one second, we're gonna open it up. And basically, our team will enable you for the indicator. You receive an email confirming your enablement, and then you'll be able to also access the API key right here. So simply type your TrendSpider email, click Save and Connect, and then within 24 hours, you'll be set up, and you can then copy the API key from here and add it to the indicator. So very, very, very easy. So directly from the dashboard from here. Now, before we go into the indicator and before we go and showcase live how the indicator works, I think for those who are MenthorQ customers, you're probably already using the gamma levels, but for those who are not, we want to spend like a few minutes going through what the indicator will allow you to have, and then we can go into the platform and see some live sessions and also like look at the scanners. So the first thing is what are gamma levels? So gamma levels are really levels that are derived from the option market, and they are very important because their impact is not only important for options, but it also extends to future stocks, ETFs, indices, and crypto. And the reason is very simple. You see it from this chart, because the option market is very, very important, and dealers hedging positions and hedge option position using the underlying asset. So if you are trading futures, you also need to monitor the option market, because market makers are actually hedging large option position by trading futures. So what becomes an option flow is also a future flow, because as a result, they would be buying and selling the underlying futures. So typically when we are in a high gamma environment, we're seeing a fast moving market. So we're seeing a lot of volatility. If we are in a low gamma environment, then the market could be more calm and stable. And we're going to show you how you can also trade the levels. But why are these levels important? Because they help you understand if the price may break or may stall at the specific level. We also can tell you where dealer flows may create support and resistance. Again, support and resistance driven by option flow. And then, of course, you could manage those your trades by looking at entry and exit levels, by looking at this at the levels. So very, very important. So most traders only look at charts, right? But that's just on the surface. So you look at price action, but option data actually can show you where the smart money is positioned and how market makers might need to hedge at specific levels. So they provide you with an additional edge, and today we're going to show you some of these examples. And basically the other important part is that over the past few years, and we're going to look at some charts as well, zero DTE's flows have really grown significantly. So understanding how this gamma exposure on zero DTE's options can really dictate where the price action could go is very, very important. So gamma can help you reveal where there's a lot of pressure at specific strike prices, the prices that will act as magnet, and where volatility could change over time during the day. But to be able to show you this, let's go into this chart. So we show this chart a lot because it's very, very important. This chart shows you the average daily volume on options from the early 2000 up to 2024. As you can see, from COVID onwards, the volume has really dramatically increased. So understanding the importance of options is very, very important, because there's a lot of liquidity that goes behind those flows, and understanding how the option market can impact is very, very important. So now let's go into what we provide for traders. So within our platform, we give you access to our quant models, our gamma levels. We're going to look at blind spots. We're going to look at some of those today, but we also give you access to our application and our advanced models that you can then use to formulate your trading strategy. We cover about 1,300 assets that include stocks, ETFs, indices, and futures. We also now have data on Forex. So for Forex trader, you can also use Forex. And we are launching our crypto gamma levels at the end of the month. And then later on in the year, we're also going to start covering European futures and European stocks like DAX, Euro stocks, and so on. So crypto is coming at the end of June. And then later in the summer, we are going to also look at the European futures. As Mike mentioned, we also provide intraday levels. So you guys can access gamma levels intraday on stocks, ETFs, and indices. We provide 14 updates throughout the day. So every 30 minutes, you get new levels. And the beauty is that with the TrendSpider integration, everything is automatic. So everything is delivered via API. So you guys just have to have the indicator set up, and the levels will update on the chart. All right, so now we're going to spend maybe 5 or 10 minutes just going through the different levels and what they are, so you can learn how you can use them. So our levels, and we're going to start from our gamma levels, and we're going to also look at our blind spots. They're divided into primary levels and secondary levels. The primary levels are mainly 5. So the core resistance, put support, high vol level, and our one-day min and one-day max. And then on top of that, we are also providing the equivalent just for zero DTE's expirations. So our core resistance is going to be looking at the full option chain, but we also provide you with the core resistance just for zero DTE options. And the reason is very important because it can actually move a lot of liquidity throughout the day because of the sensitivity of the gamma. Then we have our secondary level. Secondary level are our JAX 1 to 10 JAX stand for gamma exposure. So we are basically going to show you the levels with the highest gamma exposure. JAX1 will be the highest, and JAX10 will be the lowest out of the top 10. But we're going to go into details about that. And Mike, let me know if you have any questions at any time.
Yeah, I'm actually curious. One thing is kind of curious of like the difference between like the intraday levels and then the 0 DTE, if that makes sense, because
Yeah.
there's the end of day and then there's the intraday levels and then there's also the 0 DTE. So maybe I'm just curious how those differ.
Yeah, so the models between the end of day and the intraday is the same, but the difference is that we calculate the data multiple times per day. The end of day is very important because typically large institutions, they tend to position themselves at the end of the day, and then they might reposition themselves at the beginning of the trading day. So like today is a good example. There was a lot of movement overnight. So understanding how the intraday levels can help is very key because market will reposition at the open. So it's important to understand that option on indices and stocks, they are 9:30 to 4. So the repositioning comes in at the open. That's why the intraday levels become very, very valuable, especially during volatile days.
Yeah, definitely. Yeah, it's a great showcase today because the market kind of dumped in the middle of the night last night, and the levels that cleared at the end of day yesterday are going to be wildly different from intraday today. So that's very powerful. I was using that this morning. Very cool stuff there. And then my only other question is maybe you can explain the JEX 1 through 10. Like what is 1 like and what is 10? Like
yeah, absolutely. So to do that, maybe I'll just go back to the chart, and basically what you see here is via the dashboard you'll get access to our models and data, and this is our main chart. So this is looking at the net gamma exposure of the asset, and what you see are the net jacks, meaning like at the net of the gamma from call and puts, what are the strike with the highest gamma exposure. So what you see here is the largest green bars are going to be our primary levels. So we have our core resistance, which is this level here, and you can see the value here 6,100, and we have our put support, which is this wider red bar, which is 5,800, and then the other levels, which are those like really wide green and red bars, becomes our JAX level 1 to 10. So basically JAX 1 will be one of these bars up to 10. So we show you the top 10. And why is that important? Because they become market reaction zones. So even though they are not as wide as the primary levels, they also carry a lot of importance. So I would always combine the levels on the chart to also the model on the dashboard to understand where the gamma exposure is for a certain asset.
Yeah, now that makes a lot of sense. So they're literally like the secondary levels because the call resistance and the put support are the most significant, and then the JEX are kind of the secondary. That makes a lot of sense. And then and JEX 1 is going to be like the highest compared to 10, right? Right.
Exactly.
Okay.
So JAX 1 the highest and JAX 10 kind of the lowest. Even
Awesome.
though like it doesn't mean that it's less important, but it's also as the lower gamma exposure than JAX 1. Yes.
Got it. Yeah, that makes sense. That makes sense. And then, yeah, I guess one other question is the 1-day min and max. I know some like the Black-Scholes model, I believe. Maybe that sounds dumb. I don't know. But the Black-Scholes model does have their own standard deviation way of calculating the expected move. So this is your guys' own proprietary version of that, basically, right?
Exactly. Yeah. So you can calculate the expected move from the option data using implied volatility and obviously option pricing data. We have calculated our own 1-day max. I think I have a few slides to show you, for example, how it works, some backtesting results, and we can go over as well. Yes.
Yeah, sounds great. That's all from me.
All right, so let's go maybe into the different levels, and then we're gonna go and see how they play out throughout the day, and maybe look at also at the scanner. So the core resistance, as we said, is the level with the strike level, which has the highest net call gamma exposure, and basically, if you see it in the chart, it's basically the widest green bar that you see highlighted here. You can see that from the chart that I showed you. And then how can we trade the core resistance? So there are two ways that you can think about core resistance and put support. Resistance comes from the option market, so don't think about it in terms of technical analysis. Think about it in terms of options positioning, right? So this is the level which has the highest gamma exposure coming from the option market. So most likely in many cases, and we see it last week when the core resistance on SPX was a 6,000 and on ES as well, and the market kind of stalled around that level. So you can trade the core resistance in two ways, and think about the core resistance in two ways. One is a rejection or a pullback, right? So this level often acts as a strong resistance, not just technically, but actually by looking at market structure. So it's where a large number of investors are holding call positions and where the market makers are heavily hedged, right? So as the price gets to that level, the market makers start to sell the underlying to stay delta neutral, right? So as we are approaching this level, the market makers starting to sell, and also the potential investors are also monetizing those option positions. So that's why when we get to that level, most likely we see in many occasions a pullback or a rejection, right? So that's one way of looking at it. The second way is looking at it as an inflection point. So if the market is very strong and we are in a very bullish market, a lot of investors might roll their call to higher strike. So we've seen it last week when the core resistance on SPX was at 6,000 and now the core resistance is at 6,100. So the market is kind of like strong and investors are kind of like moving higher, right? So as a result, market makers also adjust their hedges, and if the price continues to rise towards new strikes, they may need to buy more of the underlying to stay delta neutral, and that can push the price even higher. A very good example of this is when we saw the GameStop saga in 2021. The reason why the price went really exponential is because nobody was selling their call position, and the market makers just had to keep buying the underlying to stay delta neutral, and that pushed the price of GameStop through the sky, basically to really new highs, right?
Okay, yeah, that makes sense. So basically, you'd use these call resistances as either a place maybe to take profit or to short. But I'm curious, like, do you wait to see like some sort of reaction at the level before you would think about getting into a trade, or do you kind of just like if it hits call resistance, you think short first, and then if it doesn't work out, you just stop out, or do you wait for it to kind of react on that level?
Yeah, so I think it's important. It's a good question, Mike, and I think it really depends on the price action, right? So it depends. So we look at a lot of different things, but we also need to look at if there are other levels that are close that can be also like a support. So think about the level as kind of like an army of soldiers that can help you really through the price action. So you're basically want to have enough support to the upside, but enough support to the downside. So if you have, for example, strong level to the downside, and then obviously you're thinking of shorting, then maybe that's going to be hard, because then you have those levels that could potentially reverse the market. But if you don't have a lot of levels and you have also levels above that can protect you, those could become your stop loss targets. So for example, if I have the 1-day max on top of the core resistance, I know that potentially that could hold, so that could be my kind of stop level, and then I could potentially take a short and looking at the price action as well.
Yeah,
but
that
they
makes
can
sense.
act as confirmation, so it's really like they are very good at helping you with the confirmation, helping you with take profits, stop loss target, and so on.
Yeah, that makes a lot of sense. Combine it with other technicals or indicators too could probably help with validation as well.
Yeah, and I think the key, Mike, is to add an edge to the strategy that you already have. So if you're trading
Right.
and you've been trading for a while, clearly you have been successful, clearly you have been developing a strong strategy. Adding this can really help you then get the edge. So maybe like keep you away from a trade that you shouldn't take, or maybe help you take profit without losing potential returns that you were able to get. So yeah.
Yep, definitely adds another layer of validation before you get into a trade for sure.
Yeah, and the other important part is that option market is forward looking. So you are using data that is actually thinking about the future rather than just looking at the past. Because obviously all the technical indicators are great, but they're also relying on past price action to potentially
Right.
forecast the future. So option data can really help you, because if those strikes are respected, that's where the market thinks the price could go. So they
Right.
are betting that the market could reach those higher highs or those
Yep.
higher lows.
It's a good point. And how far out does the expirations go to? Like what is like kind of the time frame here? Like I'm just thinking of like the difference between like a day trader and a swing trader, um, and the way these gamma levels are calculated. I'm curious, like how far in the future, like expiration date wise, would they go?
Yeah, so we take the full option chain. So for example, here, if you see on SPX, we take all these expirations. And of course, the further the expiration, the less gamma you will see, because obviously
Mhm.
there's not going to be a lot of activity on further down the expiration. But we have all the expiration, and we also have our zero DTs. So we also look at the zero DTs data. So yeah, and those become important level as well, because you can look at just today's expiration or all the option expiration.
Yeah, no, for sure. That sounds good. Very cool stuff so far, Fabio. I'm learning a lot.
Good. So the next is the put support level. So we're going to go through those, and then we can look at some example. So the put support, again, to the opposite side is the level with the highest net put gamma exposure. And if you look at the chart, so this is our net gamma exposure chart, the one that I showed you earlier, is the level with the highest or widest red bar. And basically, why is the put support so important? Because here we see the highest net put gamma exposure, right? Which is a zone where there's a lot of heavy dealer hedging and investor positioning. So again, here we also can trade it in two different ways. So the reason why we call it support is because it could be a barrier to the price, for preventing the price to go down, because there's a lot of activity. So what you see here is that you normally see a bounce to the upside. So when we reach this level, typically we see a reaction, so reverse trade to the upside. And why is that? Because if dealers were heavily short due to a lot of put hedging, as the price drops and these puts go deeper into the money, the dealers are shorting, but at some point the put holders are going to monetize those puts, right? So as they close those puts, then the dealers doesn't need to hedge anymore, and they basically buy back the shorts, and therefore that's why we see basically the price stalling at this level and then basically reacting quite strongly to the opposite side. So it's
Very cool.
essentially, it's like, think about if the dealers are short and they're closing those edges, they are starting a new buying flows, and that's why the price kind of reverse to the opposite direction.
Yeah, so it's basically using the option flow to see where the options are, and then using the options flow to determine which way they have to hedge, and following the market in that sense.
Exactly.
Yep.
And the other option that can be is, again, similar to what we saw with the core resistance. Let's see that we are in a very, very bearish market. This happened really fast in February and March, when we had those tariffs situation going, where the market is really bearish. So investors really start to roll their hedges. And basically, if they start to roll their hedges lower, because they think there's going to be a deeper move to the downside, then of course that puts a lot of pressure on dealer hedging, and that's why we see those strong move to the downside. So it's basically a start of a really bearish force that increases liquidity to the downside. And when we break the put support, we typically see strong move, like with strong candles. And yeah, so that's like another way of looking at it. So it becomes another inflection point to the downside.
Yeah. Yeah, and I'd bet these levels are like 2 times more important on like the monthly expiration days, I'd assume, right?
They are very important, especially when there's a lot of gamma. So like, for example, June 20, which comes up in next week, is going to be a very, very important expiration. And we can see it, I can go back to the chart here. We can see it right here, where basically we have, this is looking at SPX, we have 27% of gamma exposure expiring next week on the 20th.
Wow.
So again, this day is going to be very important. And of course, what happens after, again, we need to see where the market is on that day, because a lot of different scenarios could happen. Investor might roll, their position to upper levels or to a further expiration. And as this option expire, then obviously there's going to be some technical correction, some technical move happening because of a lot of gamma kind of like expiring next week. So we have 27% of gamma, 29% of open interest, and 47% of delta, which is also very key.
That's very cool. When you're saying like 47%, that's like of all current options out there?
Yeah, by looking at the whole option chain, we calculate our exposure and our delta exposure. So 47% of delta exposure in the market expires next week.
That is crazy. Yeah. That's a lot. It's half the option market.
Yeah, and also not only on the SPX, we also see that on gold. We also see that on the some of the Max 7 companies. So just pay attention. VIX has a very important expiration as well. So if we look at VIX, also next week, there's going to be a lot of flow expiring. So very, very important there.
Yeah, for sure. For sure. And the VIX expirations are usually different. So that's another whole beast in its own, I bet.
Yeah.
Awesome.
But the levels on the VIX are very important as well, because they react very well with the SPX or futures levels. Yeah,
definitely. Yeah, all sounds good. Very cool, Fabio.
All right. The next one, which is another key point and a very, very important concept, is the high vol level or high volatility level, which basically helps us define the shift between positive and negative gamma. It's always referred as gamma flip point. It's a bit more complicated than that, so we use a different calculation than a simple level. So we look at the curve of gamma by shifting from positive to negative. So we don't want to spend maybe too much on this today, but basically the idea behind it is that the market can be in a long gamma position or in a short gamma position. If we are in a long gamma position, that means that the market is buying more, or investors are buying more options than selling. So the overall market is long options, right? When we are in a long options environment or a positive gamma environment, market makers hedge in a different way than when we are in negative gamma. So they go long when the price goes down, and they go short when the price go up. As a result, the volatility in a positive gamma environment is typically lower. And why is that important? Because as a trader, you come into the day and you want to know if you are in positive or negative gamma, because if your stop loss is very tight, in a negative gamma environment, you might be chopped out very fast. In a positive gamma environment, on the other hand, that strategy could work. So understanding this is very important. On the opposite side, when we are in a negative gamma environment, the market is selling more option than buying. So the overall market is short options, and market makers are going short when the price goes down and going long when the price goes up. As a result, volatility is higher because the way this hedging works creates an inflection in liquidity, and that's why when we see the increase in volatility. So it doesn't mean that the price is just going to drop. It means that volatility is going to be very high. So for example, if you're trading NQ and you have a 20 points stop loss for your strategy, that probably is not going to work if we are in a negative gamma environment, because the move that you could see there might be very strong and you could get chopped out very fast.
Yeah, because market makers are following where the price is going, just exasperating those moves. Yeah, makes sense.
And then you can see basically the gamma condition or the gamma environment here directly into the dashboard. So the first thing that you see here is the gamma condition. So here we are, for example, on SPX, we're in a positive gamma environment. We're still in a positive gamma environment. Let's see what happens today. But basically, you can see it right here. And that also updates intraday. So if you go into the intraday section, you will also be able to see if we are shifting throughout the day, which another is a key important element in a positive or negative gamma environment.
And then on the chart, we see the HVL level. Correct me if I'm wrong, but when we're above that level, that is positive gamma. Is that how it works?
Yes, yes, yes. It's
Okay.
so it's a bit more complicated, but think about it as, yes, a level
Okay.
where we're seeing the shift in positive to negative gamma, and therefore also like the volatility that comes with it and the potential impact on your strategy for sure.
Got it. Okay. Got it.
All right. Um, So we touched that. Then, of course, zero DTs levels, very, very important. So we have our core resistance put support and high vol level zero DTE. Those are only looking at the same day expiration. Why are they important? Because the gamma and delta of zero DT options are much more sensible. So even a small move in price that is approaching the expiration at the end of the day could actually move the market quite a lot. So options that might be worthless at some point throughout the day, when we see a strong price action, they might become worth a lot. They might become in the money, and therefore market makers will need to hedge heavily as we approach those expirations. So very, very important. Zero DTEs are super key in this market. So we also provide that into the indicator.
Yep. Yeah, that's why people love trading them too. I mean, there's so much more options volume is coming in. A lot of it is zero DT. Is that correct?
Yes, yes, for sure. I mean, the reason is very simple because with zero DTEs, you could actually have higher profit in a shorter
Right.
amount of time, but at the same time, they could go to zero very fast. So, I mean,
Yes.
we have a lot of users that, they sell zero DTE options to benefit from the premium because the premium decays very fast, but at the same time, they're also very, very risky. So,
Definitely, definitely. I've heard of some option selling strategies, and I feel like using these levels to pick your short strikes, the 1 day min, 1 day max, could probably
yeah.
be very useful for strategies like that.
Yeah, absolutely, and we can go into that here as well. So the 1 day max and the 1 day minimum, basically, it's a level that we provide for the next day. We update the level at the end of the day, and we also update it in the intraday gamma levels at the first snapshot of the day. So at 9:35, we would update the 1 day max and the 1 day minimum to account the overnight activity. So when we go into the chart later, we can actually show a good example of what happened last night and how the
Yeah.
levels updated. So it's very, very good. And basically, the idea behind it is to provide a barrier of volatility for the next day. How can you use this? You can use this as, again, if you're selling options, as strikes for your option strategy, but you could also use it if you're a futures trader or a stock trader as potential target price if you are already in the trade, or as potential reversal level if you're thinking about getting into a trade. And
Yeah.
why are those very important? This is like some backtesting results that we have on our website. This is looking at 4 years of data. We are going to update everything very soon, but essentially, the idea behind it is that if you get the levels today for the next day, the price tend to stay above the 1 day minimum on 87% of the days over these 4 years of history on SPX, and it tends to stay below the 1 day max, close below the 1 day max on 85% of the days. So again, very important because of course there's going to be volatile days where the market just breaks those levels, but the key is using statistic and data driven strategies to potentially formulate an idea. So we're going to show you some example as well. But yeah, I think
Yeah.
this is very important.
No, that's very cool results.
This is an example of April 2nd. This is when Trump announced the tariffs. The market, this is, I think, is NQ, if I'm not mistaken. The market went from the 1 day min to the 1 day max. So this was the move for that day. So we were bottoming before the opening, touched the 1 day min, the price started going higher, and then went to the 1 day max and then reverse. So this happened both on NQ and ES. So again, as a trader, how can you trade this? So if you were thinking of a trade, you could have, take a long here, and then where is your target? As we approach the 1 day max, again, you don't want to lose your profit. You did a great job at making this move. Can you use this level to potentially maybe scale down your execution or potentially use it as a target? And then, of course, what happened after the market kind of reversed and kind of stalled around this level, high vol level and core resistance.
Yeah, it's an awesome example. It really truly demonstrates how cool these levels are. And that's from the day before, correct?
This was the day, so the day before, meaning the same day, but then at night after 4 p.m. There was a strong announcement, so the market dropped. But
Got it.
during that day, at the open, we saw the strong move to the upside, and then of course, then we saw this rejection. Then after that, there was a big announcement, and obviously the market dropped, I believe. But throughout the day, you could have really used those levels to kind of like went from level to level and potentially have a nice execution there.
Yeah, most definitely. Great example.
And then finally, the last ones, and then we can go into the chart and we can go into look at the other indicator, is the JAX level 1 to 10. As we mentioned already, JAX 1 is higher, JAX 10 is stronger, JAX 10 is the 10th highest level. And how you can use that? Again, those can become very important reaction area. This is the price action from yesterday on ES. As you can see, JAX 1 really acted as a strong resistance. And then, of course, our JAX 5 also acted as a strong support. So a lot of our traders, they use this level to scalp or to trade between boxes or between levels. So they become a very, very important support and reaction area.
Yeah, definitely. Especially if you combine it with like a strategy already running, it's going to give you that extra validation to take those entries and maybe show you where to take profit even. So yeah, very cool.
Absolutely. Yeah, so let me know, Mike, if you want me to pass it up to you, and then we can go back into the platform.
Sure. Yeah, we can go back into the platform if you want. We can show off kind of the gamma levels in kind of how the markets are looking right now. And then we can even get into scanning for these levels, because one of the awesome things on TrendSpider now is that you can actually scan for stocks that are approaching these key levels, which is very cool. So right now I have SPY open on the 15-minute chart. I have and I have the gamma levels indicator active. And as you can see, you can go into the settings and change all the levels. You can hide the JAX levels if you wanted to show or hide any of them. But this is how they look on the chart. Essentially, you can kind of scroll your chart up to see them a little bit easier. One of the cool things that I like too is that when these levels kind of overlap on each other, they have the slashes in between them. So as you can see, right now the call resistance and the call resistance 0 DTE and the gamma wall 0 DTE, are all lined up. So, and you can see we pretty clearly rejected that level. So that's something I've been kind of looking out for too, is looking at the levels that line up. But what I wanted to show you guys is the market scanner now. So we actually did build some pre-made templates for these MenthorQ levels. Let me show you guys on the TrendSpider store. We have one called the put support scan, the call resistance scan, and then we have the 1-day min and max and the HVL scan. Probably going to stick just to showing you guys, the put support and the call resistance scans first off. So anyone can go in here and add these to TrendSpider. And basically what the scanner does is pretty straightforward. It scans for stocks trading at the put support, which is very helpful if you're looking for trade ideas. And once you go ahead and import them into your account, you'll see them right down here. This is how you get to the store page using these ones, the yellow links. But once you import them, you will see this. Let me see. The put support is right here. And so again, these are just scanned templates. Since you have to enter your API key, we do recommend making your own and putting your API key in so you can actually save them. But this you can use to kind of just build them on your own, use them as inspiration. So as you can see, the scan is actually very simple. All it is that it's scanning for the put support level to be within range of the current price by 0.5%. And so if we were to run this scan, it would literally just find any stocks trading in the index you're searching in this case, the S&P 500 index, by that amount. And let me show you now, since it doesn't have the API key, you have to put that in. So if you click on the parameter right here, you just enter the API key right there, press apply, there, press apply, and then that's how they'll work. But let me show you, since these are templates, how to build one on your own, so that, because if I were to close this out, the API key wouldn't save. So I'm just going to go ahead and click new scanner real quick. You can name it anything you want. Just name it MenthorQ, put support live. We'll just search it. We actually have the MenthorQ watch list. It covers all the stocks that MenthorQ does, and all the assets, including not just stocks, crypto and futures, all that stuff. And then once you have the scan searching in the correct watch list, you just add a condition, and then you're going to use indicator, of course. And for the scans, we recommend using the 30-minute for these MenthorQ indicators, because that's the lowest one you can use. And then you type MenthorQ, and in this case, I'm going to be building the put support scan. And so I go all the way to the bottom down here. These are the ones on the chart. These ones down here will just be the levels from the indicator. And I'm just going to click the put support, and then I'm going to do is within range of the price. I'll use the 5-minute. And then very important that you guys use the closing price, so you get the current price. And then you can do by whatever percent you want. We set it at 0.5%. And also very important, click the current candle box. So that way it's scanning also the current candle and not the previous candle. So you're getting those kind of real-time results. And so there's one of them. You have the put support level. Then I'm gonna do the same thing, but on this time, I'm going to add the 0 DTE one as well. So I'm gonna put MenthorQ put support, and then it's gonna be the bottom one here is the 0 DTE. So that way we can scan for stocks trading at either the 0 DTE or just the regular put support. And we're gonna do within range of the price, use the 5-minute close by, again, 0.5%. And again, enter your API key into these boxes. You click it, paste it in there, and apply. And once you do that, you press scan, and it'll go ahead and scan for stocks trading within the put support level. So let that go for a second. I actually already have another scan I built up here on that list. But before we do that, I actually want to show you guys too. You can also add, if you have another indicator that you like to combine with these levels, you can go ahead and add any indicator or even fundamental criteria, anything you want. So in this case, I'll just add, like, maybe you want the price to be under or you want the RSI to be under 30 when it's coming to the put support. Just for a little bit more confirmation, you can just add the RSI indicator is less than a constant value of 30. And in this case, it'll find stocks at put support within 0.5%, and then also with their 30-minute RSI under 30 for just that extra validation. And you can use this on any indicator you want. One other thing too, if you wanted to just hide stuff from the scan, you can click the eyeball there. So maybe you just want to look for 0 DTE today. You can just unhide that one and only search for 0 DTE pretty easily like that. So yeah, that is basically how you build the scanners in TrendSpider using these levels. And all the levels are in there. You can use the conversions, the blind spots. Fabio, does that all make sense? Do you have any questions on that aspect?
No, I think what I love about this is that this can be done also intraday. So this is very powerful, because sometimes we want to find ideas and we cannot monitor maybe 100 stocks or 1,000 stocks, and having an updated list that can scan throughout the day in real time is very, very powerful, I think.
Yeah,
so I think
for
you guys
sure.
did a good job there in creating this technology.
Yeah, definitely. And then once you actually build the scan and save it, you don't even have, so you can close the market scanner. I already have one right up here. And then you can just add a watch list too, to a new column or the current column. And then whatever that scanner you just made is called, you just type right up here, MenthorQ, like put support. You just add it and it'll appear right here on your chart. And then you just click the refresh button right here, and it can rescan for you anytime. and it'll basically just pull up, any stocks trading within range of the put support. Again, you can make it for call resistance. You can make it for any of these levels that you want. So very flexible. You can combine with other indicators on your chart, combine with, even fundamentals if you wanted to. So very powerful way to scan and find trading opportunities based on these levels. And yeah, we have a support team that can help you guys, build the scans if you have specific stuff you want to do. But yeah, that is pretty much the workflow to building scans and finding these stocks, in real time, showing these levels. So very powerful stuff.
Yeah, absolutely.
Yeah. And so that was just for the gamma levels. If that all makes sense, maybe I'll pass it back to you, Fabio, if you want to get into more of like the next indicators.
Yeah.
Being either the blind spots or the conversions levels.
Yeah, absolutely. I think we have, before we go, Mike, we have a question. I think maybe if you can show it up again where the list comes up.
Sure.
Thank you.
Yeah, the scan list is all right here. I can pull it back up again in the actual market scanner. So yeah, these are the live stocks. We have Costco in there right now. We have Cloudflare, which is NET. They had an outage yesterday. That was kind of an interesting one. SPXL is in there. That's the SPY 3X levered ETF. Other cool ones. We got DocuSign, APP is a pretty popular one. You can look at some of these on the chart. But as you can see, they're all going to be trading within either the put support or the put support 0 DTE by 0.5%. And you can, tidy these up a little bit too, however you guys want. You can change it from 0.5% to even, higher if you want to get stuff, or even tighter if you want to get stuff that's even closer to the levels. And another cool thing that I've seen as well is that you can do within the last certain amount of candles. So if you want to see, stocks that were trading within 0.5% of this within the last 3 candles, in this case 5-minute candles would be 15 minutes, you can go ahead and add that as well. So tons of different stuff you guys can do. But yeah, some more live ones. We got SPCE right here. You can see it's on the put support, HVL, put support 0 DTE. So a lot of, 4 different levels lining up right there. It's been pretty clear. It hasn't been this morning. It kind of broke below there a little bit. But that's an interesting one. I think is NVDL. Yeah, this is the NVIDIA 2X levered. Kind of an interesting one too. So yeah, feel free to chime in. Like if you have any, nuances or anything here, Fabio, if you're looking through a put support scanner like this, is there anything specific you'd be looking for regarding these other JEX levels, or, this one, you got the 1-day min below it.
So I think, these are awesome for trade ideas. So if you're looking at a floor, so if you're looking as the price hit the bottom and can we reverse, for example, or on the opposite side with a core resistance as the price reaches the top. But the other ones that are very, very super nice are the 1-day min and 1-day max, because of course we know that those levels will be respected on many, like if you have statistical analysis there, then it could become a very, very nice idea where the price approaches this 1-day min and 1-day max, and maybe there could be a strong reaction. So I think those are very, very strong, and they are real time, so which is important.
Yeah, no, for sure. And then we can even go, actually, something that we talked about earlier too. If we go pull up the SPY here, we can show the difference between those end of day and intraday levels real quick. So if I open the gamma levels properties by clicking the 3 dots right here, again, right now we're on end of day. Okay, so end of day, this is using yesterday's close option prices essentially. And actually we rejected the call resistance almost to the T Oh, that was yesterday. But today, you can see we kind of gap down a little bit. And let's just pick a level just to see where it is. I'll use the put support right around 598. And so this is the end of day level. And if I go, remember 598, that's where put support is. If I change it to intraday, put support is now all the way down there at like 590. So as you can see, it's very useful, especially in days, like this, where the market went kind of crazy overnight. So you don't have to rely on, yesterday's levels. You can have kind of more updated 1-day mins, 1-day maxes, and the put supports, based on what the market is doing now, especially when we have, a pretty big gap down overnight. Definitely shows the power of that pretty well. So that I thought that was really cool this morning. I guess we got a really good day to kind of show this off too, being how crazy the price action was. So
Yeah, and if you want, we can also go into the conversion side, Mike. I think that's...
Yeah. Let me pull up conversions. And so right now, so I have there's a lot of different conversions you can do. Would you say this SPX to ES is probably a good one to use?
Yeah, I would say the conversion, and if you want, I can also show it. I have it on my screen.
Yeah, it's up to you.
Yeah, so I can show why the conversion. Let me see if I can share. All right, seems like I cannot share, but basically, let me see if I can do it. Basically, the conversion is very important, especially if you are a futures trader that is trying to trade maybe ES or NQ. And of course, we have gamma levels on future options, but we also have gamma levels on the ETF and index.
Oh, Fabio, I think we lost you for a second. All right. Well, hopefully that's just he comes back. Maybe it's just an internet bug. I don't know if you guys can even see me still. I think we're good.
Sorry.
Oh, there you are. All right, there you are. Okay.
I got kicked out.
No worries.
So why is that important? Is because the option chain of SPX or SPY, in terms of option volume, is much higher than ES.
Right.
So having the levels of SPX on ES can be very, very important. So we have access to the 3 option chain. We have access to the index, the ETFs, and the futures. So you could use the futures level on ES, but you could also use the conversion. And yeah, if you convert from SPX to ES, we also have within TrendSpider the auto conversion, where you guys can choose the time of the day where you want to use for the price to convert, which is very, very important.
So yeah, maybe let's go into that a little bit. So if I pick 9:30 a.m., that's going to obviously be converted at 9:30 a.m. So this one doesn't auto update. You pick the specific time you want to use each time. Is that how it works?
No, the way it works is think about SPX trade 9:30 to 4.
Yeah.
So at 4 p.m. the market closed, but the future market continues to trade. So if you are converting ES to SPX using the official close of the futures market, which is at 5 p.m., anything could happen in that hour of gap. So if you are using the end of day price, then maybe sometimes the ratio that you use to convert is basically not right, because there was a lot of movement and one asset moved and the other one didn't. So what we did with TrendSpider, we now allow you to pick what time of day you want to convert. So typically, it's always good to compare apples with apples. So if you use a 9:30, would means that you're trading at the 9:31 candle of both ES and SPX. This is when the market opens, but you want to wait for 30 minutes to make sure the market assesses, and you could use the 10 a.m., for example.
Got it.
Or some user might want to use the closing price, so you could use 4 p.m. kind of like close for both indices and futures.
Yeah, no, that makes total sense, because the ES is basically always trading. What do most people normally use? Probably the open, I would assume, or
So I would say it does. So throughout the day, the ratio, so the difference in price between the future and the index is very, very similar. So
Yeah.
any time after the open would work. Um, there's not a lot of a gap between the rest. So if you look at it in a chart, it's very,
Yeah.
very consistent throughout the day. So I would say I could use it, 9:30 or 10 a.m. would work, I think.
For sure. So yeah, at 4 right there, we're at like 59.77. So yeah, pretty close, but slight differences. But good to have, definitely good to have that customizability. Yeah, definitely good. And then you have also the end of day and intraday on the conversion. It's basically the same levels in a sense, right? It's just converting them from one asset to the other. Obviously, because something like SPX has a lot more options flow that would be very useful to ES traders.
Yeah,
So
and I think the idea behind is really that then goes into the blind spots indicator, which is asset correlation. So think about if we are in a market where Nvidia or Tesla are very key to the market because they are 10% of the index or 7% of the index,
right.
and there's an important gamma level of one of these assets being reached. Of course, if there is a rejection or if there is a reaction, the NQ will also be affected. So you might
Right.
see a rejection of a Tesla level or Nvidia level that would also affect the NQ. So
Got
the
it.
conversion will allow you to convert any asset to any asset. So you could potentially pull up the Nvidia levels on NQ if you wanted to.
On the
Um,
conversion.
yeah, on the conversion. So you just
So
have to type Nvidia.
NVIDIA to NQ. Oh, and then you have to go on to, this would be the NVIDIA, correct? Did I do that right? Oh, no, NQ, sorry.
Yeah.
And these are the NVIDIA levels on NQ. That's really cool.
Yeah. Yeah, so as you can see, sometimes when there is a strong reaction on one of these assets that has a very big impact in the index, you also see a correction on the index. On the index. So obviously, the challenge here is that there are a lot of assets that are very heavily correlated with NQ. So you cannot monitor all the Max 7. You cannot monitor maybe gold. You cannot monitor all of that. So what we did is we created the blind spot indicator. So blind spots currently works on indices, major ETFs like QQQ, SPY, IWM, DIA, and Forex. So the blind spots indicator basically looks at correlation, looks at gamma levels and option positioning, and then we basically define a machine learning algorithms that looks at areas in the chart that will be a reaction zone based on that data. So as you can see here, basically, instead of having to plot all the levels for Nvidia, Tesla, Meta,
Right.
and having like a million lines on a chart, you have basically the blind spot there as a confirmation.
So basically these blind spots, they work on the indices, and they're essentially a blend of, Tesla, Apple, Microsoft, all these big hitters. Is it specific stocks, or is it kind of all the stocks?
No, we look at cross correlation, and we have a correlation algorithms that updates once a week and look at the most correlated asset. And it don't need to be just stocks. It could be the VIX, it could be oil, it could be commodities, it could be a lot of different things. A good example is with Forex. So if you pull up maybe one of the currencies like USD, CAD, or USD, Euro, you will also be able to see those levels there, I believe.
Let's see. We have a lot of different Forex ones. Let me see. Blind spots.
Okay, or maybe, okay, I left. But if you, let's maybe try with ES and or NQ.
Yeah.
Yeah.
So you see right here, basically a blend of all across any correlated assets and translated into the ES. That makes a lot more sense to me. That was something I was kind of wondering about, like the difference between the conversions and the blind spots. So the blind spots is basically like an AI version of a bunch of the conversion levels combined.
Yeah.
Yeah. Awesome stuff. Awesome stuff. Yeah, very helpful. And then, yeah, would you ever use these in combination with the gamma levels? Because I know everything kind of revolves around, you know, the original gamma levels. I'm just curious if you like would use these together, or you kind of use them standalone, or it depends on what you're trading. Maybe just curious on your thoughts on that.
Yeah, I would use them as so I would use the gamma levels as my primary input, and then I would use the blind spot as confirmation. So if you have an area where you have gamma levels and blind spots, then that acts as an additional kind of like confirmation for my potential idea.
Okay.
Yeah.
Yeah, that makes sense. So it's good to have on your chart. You can overlay them all together as well if you wanted. Like if I wanted to put on the conversions or the gamma levels on my chart too, that would also work for intraday. I'm gonna turn it back to end of day. And you can see they actually like line up almost pretty well.
Yeah.
So yeah, very cool. Very cool.
Yeah.
So let's see, what is the market actually doing right now? So we had this big dump in last night, and it looks like the end of day put support is down there. Am I on end of day? Yeah, end of day. That's actually pretty crazy. So the put support is really, really low on ES today. But if I recall, I think on SPY it wasn't that low. Oh no, it is pretty low. So in this case, with the put support pretty low, what would you be looking at? Would you probably look to change the intraday?
Yeah. So one thing you can do is if you instead of having that, you have the conversion. So if we look at ES, for example, and we have the conversion of SPX to ES, you will see that basically first, I think we went all the way below, kind of like that. We kind of stalled last night around kind of like the one day min, sorry. And then there was a very strong reaction around put support on SPX this morning.
Oh, let me pull up SPX.
And I used the intraday levels as well, I think.
Intraday, yeah, okay. So we change to intraday. Oh no, it should be ES.
Yeah, ES one.
There we go. Yeah, so that's the one day min, kind of hidden behind that little JEX level. But yeah, pretty much perfect reaction off. So the JEX one looks like the one day min kind of lined up right there.
Yeah, and also if you look further down, you see the put support kind of SPX also saw a strong reaction. Yeah.
Yeah. No, very cool. Very cool. So definitely could have used these levels. This happened kind of in the overnight session, and wow, yeah, it really got bought up to there. And now we're heading up, looks like back up all the way to the call resistance and potentially the one day max. So almost like that scenario you showed in the example where we bounced here. Maybe we'll get another run all the way back up. This is the 0 DT. And then we have the regular call resistance from SPX all the way up, at 6,090. But saw some reactions here. Basically, the one day min to one day max almost perfectly. So yeah, that's pretty awesome. And again, this is using the SPX to ES conversions, which I'm not sure how different that would be if we're just using the regular gamma levels. Let's see. So pretty significantly different.
Yeah, it's because the gamma levels on futures are end of day, while the SPX are intraday. So
right.
That's why sometimes it's very good to have both.
Oh, I see. Okay. Yeah. Okay. This futures just use end of day. Got it. Very cool. So yeah, that really shows the power of the conversions one too, with the ES, especially using the intraday mode. Very, very nice stuff right there. So would you ever trade based on the gamma levels on ES as opposed to using the conversions of SPX to ES? Or
so I normally use the ES gamma levels unless there is days like yesterday where there's a lot of overnight movement and a lot of volatility. So I think it depends. You need to always look at what's happening in the market. So market right now is really driven by macro news or catalyst or a tweet that come
Yeah.
out. So it's really hard
Yeah.
to predict what's going to happen.
Yeah.
But those levels really act as supports. And you always need to think that the big institutions are hedging once a day. They're not trading, they're not day trading. So
Right.
understanding at the end of the day where the big levels and the big positioning is very important. But of course, there is volatility throughout the day. So that's why we develop the intraday, because then you can kind of like have a support all the way throughout the day. Um,
Right. Yeah.
yeah,
Especially useful for day traders. I mean,
yeah.
because you know how wildly the market can change throughout the day or even overnight, like we just saw. So, yeah, definitely having the intraday indicators. And remind me, these update like 14 times a day, like every, what is it, like 30 minutes?
Yeah,
Was it?
every 30 minutes, yeah. So so the intraday, every 30 minutes, starting from 9:35. This is where kind of like we start seeing
Yeah.
option volume kind of like assessing at the open, and then all the way through to the end. And why are they also important, especially during earnings seasons? You could
Mm-hmm.
use the last snapshot of the day to understand where the market is positioning on a stock before the actual event. So
Yep.
if you want to like trade Nvidia before the release, of course we're never going to know if the results are going to be positive or negative, but you can use the levels to understand where the market is going and where the market is potentially looking that the stock will be.
Right. What it's pricing in based on options. Right. Yep. Yeah, that makes sense. And I know oil's been going pretty crazy lately. Was there
Yeah.
anything you want to check out on that maybe? Is
Yeah,
there
so
any?
we have, let me see, we also have gamma levels on oil. So I think if we use CL, yeah, so we cover about 25 different futures. So we cover oil, we cover natural gas, gold, silver, soft commodities, the bond futures, crypto. So you can also use the levels on crude oil as well. And I mean, I think obviously oil was driven mostly by what
Yeah.
happened overnight. So of course,
Yeah.
but as you can see, if you open up the level, you see that obviously news is the driver, but you
Right.
see how when we break kind of like the core resistance over there, how the candle kind of
Yeah.
is super strong. So again, the market very strong, driven by catalyst, of course. But then, of course, you need to understand that as the market reaches that level, an addition of liquidity is injected because of the way the market structure works. So
Yeah. And just real quick too, you can use this label offset to move these levels over a little bit like that. I made it 250. But yeah, you can see the call resistance and gamma wall right here is a pretty clear breakout level that was used right as it sprung up right there on that news.
of course.
So yeah, if you heard that news come out and you see we're right at a call resistance level, I mean, I guess it would definitely be a long at that point, even though you had the max and stuff right there, based on the news, and the pivot levels right there is a pretty nice play, I think. So definitely cool to look at. Came back down, rejected, or bounced off one of the Jex levels too, which is interesting. Yeah, we can go back to like NQ. And I know we've been in here like an hour and 10 minutes. I don't know if there's been any questions. I've been looking at the chat too much.
I think your team has been answering a lot of these. Let us know if you guys want to go over anything particular.
Yeah. Yeah. Another cool thing I saw in the chat is that, you can use TrendSpider to actually set alerts at these levels too. Like if I go back to the ES, I think it was using these levels, like if you wanted to be alerted, or maybe you want to see if we ever hit this 1-day max level, you can right click it and create an alert here. We have pretty cool ways to set alerts. You can use breakthrough, touch, or bounce, or all three. You can move the sensitivity. I don't know if you can see here, but there's a little bit of gray area that you can use. So if you want to be alerted when it's within like $7 of that level, you can change the sensitivity there. And then you can just set the expiration to whatever you want. I'd probably use the lowest 5-minute confirmation candles. Then you create an alert, and it would basically, now it's going to alert you when the price gets to that level. And So this is another really cool way to use, I guess, in conjunction, even with the scanner, because the scanner itself can find stocks that are already trading at these levels. But if you have one in mind that you want to be notified of when it gets there, that's definitely a good way to do it. So let's see. Yeah, someone said the scan wasn't working, but you probably need to enter your API key is probably what the problem would be on my first guess. So I'll show you guys how to do that. If you open up the MenthorQ scans again here, you got to make sure you click on the parameters and paste that API key in to any parameter that has MenthorQ, an indicator from MenthorQ, and apply it. And again, the ones that you import right from the store are just templates. So you want to make your own scanner. These are just kind of for your ideas. We showed you guys how to kind of build it. You can just kind of note these down, take a screenshot of it, and then click new scanner and simply build it however you want. Again, you just add an indicator condition using the 30-minute, and you type MenthorQ, again, whatever level you want. We have all the levels in here. I'll just use, again, put support. You click that, and then, yeah, you can set this to anything you want, you guys, like price, crossed up, increased or decreased. We just used is within range of. It makes kind of the most sense. Within range of the price. By like 1% or 0.5% or whatever. So once you do that, it should work. It should work just fine. You just got to make sure you put that API key in. So yeah, I think we covered a lot. I learned a lot today. It was a very good presentation, Fabio. I appreciate that.
Thank you.
Yeah.
Yeah, very excited. I think, again, the levels are great, but the power of your platform is also amazing because those scanners, and again, those scanners are a very simple example, but you can actually create more advanced one with the power of the platform. So.
No, there's a ton you could do. Like you can literally code your own custom indicator, your own whatever parameter you want, and then use that in conjunction with, your indicators, the MenthorQ ones. So very cool stuff. Very cool stuff. And yeah, both of our platforms, MenthorQ and TrendSpider, are running sales right now. There should be links going through the chat, I'm sure, for you guys to sign up. MenthorQ, I believe you guys are running 40% off. We have our Father's Day sale, and you can sign up and use TrendSpider for, just like $9 to try out the platform. So definitely, if you guys were thinking about signing up, I'd say now is the time while you get a good deal on, both of these platforms.
Yeah. Again, we are very excited about the partnership, and we are going to add more stuff as we go. So we already have plans to add more. We have a couple of other indicators that we're going to add, and more things coming. So very excited about that.
Yeah, I love to hear that. That's the best part of this update. We get, guys like you building all these awesome indicators that we get to show people, and it's just making everyone's trading lives easier. It's making the platforms better, and with AI, not anyone can code, but we have the custom indicator editor where anybody can kind of go in and just use human language to code custom indicators these days. With AI, the trading world's getting pretty crazy. So I'm very excited to what lies ahead with all these tools that are being made, and yeah, very cool stuff.
Yeah.
Let's see. Someone asked what the sniper is. Are you reading that? The sniper? I'm not sure. Oh yeah, another thing too, I think we touched on it, but there is the MenthorQ coverage watch list that you guys can import into TrendSpider that includes all the stocks that MenthorQ covers. And so that's what you probably want to use as your scan, what you scan in. You can use the S&P 500, which is fine, but Fabio's list, the MenthorQ list, is going to include a lot more stuff. And it's called the MenthorQ coverage by MenthorQ. It should be links in the chat for that as well. Definitely recommend importing that to use on this.
Yeah, I think another important update, Mike, is at the end of June, we're gonna release our gamma levels on crypto.
Awesome.
So Bitcoin, Ethereum, Solana, and XRP. And we're also gonna release momentum models on crypto, on all the other crypto coins. So
awesome.
I think, this is gonna be super cool, because then again, you'd be able to use it also within the platform directly by using the Bitcoin, Ethereum ticker directly into your application. So should be very good.
Very cool, very cool. And there already does support Bitcoin too, or like the IBIT ETF at least.
Yeah, so we support now the IBIT ETF and some of the other ETFs as well on crypto, but we also support the MBT futures. But the difference is that most of the option flow comes from the spot market. So we are basically going to do gamma levels by looking at spot options. So looking at the Bitcoin spot option flow, the Ethereum spot option flow. So
got it. Yeah, very cool, very cool. But yeah, the IBIT ETF is definitely kind of an easy way to view options, I guess, on Bitcoin, which is kind of cool. The way you would use it is you would convert the IBIT options levels to the spot Bitcoin, right?
Exactly.
Right. Yeah. Very cool. Very cool. Or you could just view the levels right here on IBIT itself.
Yeah. And you could do that with the intraday levels, with the end of day, and
awesome. Back to intraday here. Yep. Very cool. And you can even put on, you can toggle on and off the overnight session too for IBIT. So very cool. So I already have a little bit of support for crypto, but I'm sure people are going to love that when, that update rolls out for sure.
Yeah, so stay tuned. A couple of weeks. Yeah, 2-3 weeks left. So very excited.
Very cool. Very cool. Let's see. Yeah, so like people got their questions answered. So yeah, I don't know. Is there any final closing thoughts you have here, Fabio?
No, I think for me, it's for us as MenthorQ, we are very excited for this partnership. You guys have been great with us, helping us getting this set up. We have the watch list, we have the scanners already, the template already pre-made. We have the levels already there. So the setup process for TrendSpider is super easy. Within maybe 30 minutes, 40 minutes, our team is always there helping you guys get set up immediately. So I would say within the first 24 hours, you get access to the indicators, and then basically the levels automatically update, which is awesome as well, because it's very important. And you can access those levels on all our coverage. So you can have up to 1,300 plus asset directly into your chart. So if you create the watch list, you can access our coverage there, or you can customize it for your needs. But I think it's very powerful.
No, I agree. Yeah. No, the partnership with you guys has been great so far. I'm loving these indicators. I think they're really cool. Honestly, thank you guys for building these out for the platform. I think it's going to be great for your guys' users and for our users as well, combined with the scanners and just the flexibility of both platforms, to be able to plot the levels, scan for them, combine them with other indicators, even your own custom indicators if people use, their own custom logic. So yeah, very exciting partnership. And I'm super excited to see because this is just the beginning, you already have planned updates coming out. So I'm super hyped to see your guys' store page filled up with even more assets as time goes on. So.
Yeah, and I think also another thing that we are working on is historical data available on the platform. So the ability in the future, we're working on that within our API capabilities to be able to backtest historical levels. So if you are a TrendSpider customer, you'll be able to run your backtesting tool on historical data. So we're very excited about that.
Oh, that's awesome.
Yeah.
So historical data as in like previous days levels, essentially.
Yes, exactly. So if you are so let's say that you are building a strategy on core resistance and you want to see how many times, if you were to trade off the level historically, you can use your backtesting tool with our data, and that would be super powerful. So we're very excited about that.
Yeah, that sounds awesome, actually. Because yeah, we have the strategy tester, and if you guys have that historical data, just like you build the scanner, you can pretty much do the same exact thing in the strategy tester, but instead of scanning for when price hits a specific level, you can, build a strategy that takes a long position at put support, and then exits, however you want, trailing stop at the call resistance, a certain amount of candles, whatever you want, and then back test and see how it does historically. So that sounds great. Super hyped for that as well. So
Yeah,
it's just the beginning.
just the beginning. Yeah, of course.
Yeah,
Thank
definitely.
you guys. Thank you guys for being here with us.
Yeah, of course. Yeah, thank you everybody for showing up. I think that's all from my end, other than just take advantage of the sales on MenthorQ on TrendSpider. Links were in the chat. And yeah, I appreciate you, Fabio, and I appreciate everyone for showing up, spending some time with us.
Thank you guys. Really appreciate it, and happy Friday, and I hope you have a good weekend, and we're going to be back on Monday with more price action.
Awesome. Yeah. All right, everybody. Have a good weekend. Thank you, Fabio.
Bye-bye.
Bye.